Good morning, everybody. It's Chris from Serene Education with the 4 majors and us update for the 6th of January 2014. Hi guys, welcome back. Hope you had a fantastic holiday with family and friends. Hope you had a great Christmas and New Year. Getting back to the swing of things for 2014, let's have a look and see what we can expect over the next couple of months. I'm going to do the 4 majors looking at the monthly charts to start with, just to give an insight into what price has been doing over the Christmas or the festive season, and what we could expect potentially for the remainder of this month in particular, and for the months that precede us. So let's have a look at the euro against US dollar on the monthly chart. You can see I've got my monthly highs here in 2011 to my current low that we saw through 2012, and you can see prices now pulled back noticeably over the past year or so. You can see the last month in December, a lot of positiveness through that. However, through the start of January of this year 2014, you can see we've had a pullback. Prices failed to rally above that 61.8 fib level on the monthly fib. So everything's still looking fantastic in terms of long-term sentiment. We do have everything pretty much showing us we should be looking for buying opportunities. However, on the monthly, you can quite clearly see that price has now come unstuck at the 61.8. So effectively, if we are to see any further highs or new highs for 2014, and a potential for price to then rally towards our 2010 2011 highs here, we would need to see the 61.8 fib level being breached very shortly. So here you can see consolidation. So what we could expect is, ideally, if we are looking for potential for price to continue to rally, we would need to see the 50% retracement level here being our new support level, and we need to see the current high, the 61.8, being breached. You can see our indicator box very much all over the place. Our long-term sentiment still favors the upside. Clearly, we are looking at the monthly chart. That's shown clearly here on the chart. However, you could see intraday a lot of indecision, and the R-square complementing that, primarily because we have had a pullback over the past number of weeks. So we drop down to a weekly time frame. You could see that we have seen a prolonged resistance level here at the 61.8. The last 4 weeks in particular, over the Christmas or the festive season, December, you can see there hasn't really been any positive buying sentiment, and we've seen a lot of consolidation. And subsequently, last week in particular, a very bearish engulfing candle indeed, engulfing the prior 3 weeks of indecision on the market, however, at a current fib level. So clearly resistance level, bearish engulfing candle with a shooting star the prior week. So now we should be looking for price to consolidate, and you can see that consolidation pretty much showing us, or quite clearly here on the indicator box, the sentiment's still up, and you can see the candlesticks are still very much positive. We do have a red arrow in effect right now for this week, the start of a new week, so we would have to wait for the close of this weekly candle in order for this to be a genuine indication. However, you can see the candlesticks are still very much higher. You can see all the moving averages still below price, so a lot of swing highs here. So price is still looking positive upside, and as I mentioned, the 50% retracement level would have to be our new support. So price is pulling back. Expect price to consolidate potentially towards the 50. If it's going to drop any further because of the bearish outcome the following week, the prior week, apologies, we could expect the 50% retracement to be our target level. However, you can see that the RSI indicator we have primarily still flat, as we have been in a consolidated range over the past month or so. Remember, December, not a lot of action tends to occur over this period, the festive season, because primarily a lot of people are away from work. A lot of the markets are closed over the festive season, so we would expect some sort of consolidation. Let's see if everybody gets back to work now, the start of a new year. Let's start to see if price can actually start building on the current highs we've seen, or the positiveness we've seen for euro against most of the US dollar crosses for 2014. So here clearly would need to see the 50% retracement being the support level for this month, what remains of this month, and then we would need to see ultimately, to see any further upside or buying opportunities for euro against US dollar, we would need to see the current resistance level higher at the 61.8 being breached for the coming months ahead. Sterling here on the monthly, again, I just want to show you the monthly charts. I want to see the setups. You can quite clearly see over a prolonged period of time. This is going back to 29. In fact, you can see that the institution moving average on our monthly has been a major resistance level for this particular pair over the past couple of years leading up to where we are right now. You can see through 2011, 2012, we actually had the fib level here at the 38.2 being our resistance level, let alone the institution moving average. recently we have seen a lot of buying through December, November, December. We had a lot of purchasing for sterling. We had a great positiveness from the UK market that has seen price rallying against the US dollar. However, clearly coming unstuck now at the institution moving average on our monthly. So for this particular month in particular, we would need to see prices hanging on to the 38.2 fib monthly level. So we drop down to our weekly, just to zoom it over so you can see that. You can see a lot of positiveness heading into the past 2 weeks, attempting the monthly fib level here, the 38.2 level. Quite clearly prices failed even to get to those levels, but this is primarily the institution moving average on the monthly time frame. So a nice positiveness. You can see that on the long-term sentiment, we're still seeing a lot of purchasing power for sterling against the US dollar. However, intraday, you can quite clearly see we've had a lot of indecision, which has led to price pulling back. Last week in particular, we saw price pulling back. However, the start of this week, price is now trading at the underside of 38.2. So my what I'm looking for the end of this month in particular is to see if price can actually maintain above the 38.2. So we're trading below it. We are going into the first week of a new month, 2014, January 2014. So we are expecting non-farm payroll figures this week, and we are expecting the interest rates announcements on the Thursday leading up to non-farm payroll. So a lot of news out this week in particular. Is that going to reflect on price action? We would likely to see sterling gaining a bit of strength. We are seeing that. We have seen that leading into 2014. If we are to see any further upside for sterling against the US dollar, we would need to see price closing higher than the 38.2 fib level monthly for this month. If we fail to see that and we see further resistance here, then we could see price pulling back towards the current resistance level highs here at the 1623 and change mark. But ideally we could see price pulling back even further. We have seen that over the years. As you can quite clearly see, we've been trading in this consolidator range. We could see price pulling back even further towards the swing levels here at 1584, etc., back towards the institution, but back towards our monthly fib below us here at the 23.6. So very, very important if we are to see any further upside for sterling against the US dollar for the new year. We would need to see price trading above the 38.2 by the end of close of play of this month. Onto the US dollar Swiss franc. Here again, you can see that price has been in an extended downtrend since 2000. In fact, we've seen lower lows for the US dollar against the Swiss franc, and recently we've seen price actually consolidating through 2011 through 2012. In fact, we've seen a lot of consolidation for the US dollar against the Swiss franc over the past couple of years, and this consolidation has taken place at the underside of the when we have the 23.6 level here, prior support through 2007-2008 before the downturn in the market. However, since then we've actually seen price failing or consolidating, which is a good sign, but failing to actually break and trade higher than the underside of the 23.6 level here on the monthly. This blue line over here represents my monthly fib level, which is the 23.6. You can see prior support level for this, and now currently the new resistance through here through the latter part of the middle part of 2012, here again through the middle part of 2013. So price, the US dollar has failed to actually rally recently against the 23.6, and then if she continues to do so, then we could expect further resistance, which would then be a negative outlook for the US dollar against the Swiss franc. We have seen a lot of selling or shorting opportunities through most of 2013, even though it has been quite stagnant. We have seen price falling lower. However, you can quite clearly see price is now consolidated over the past couple of months at the 38.2 weekly fib level. So if we are to see any further negativity for this particular pair leading into the start of 2014, we would need to see the 38.2 weekly fib level here, which represents in the red, to be breached. That would then allow us to see a potential target towards our 23.6 level. Below that, and you can see there's a lot of there's not very much here to actually stop price from falling drastically, and we could look at 654 pips to the 23.6 level to start with before we could actually see price reverting towards those lows we currently saw back in 2011, which are all-time lows for the US dollar against the Swiss franc. So consolidative over the past couple of years. We could see another bounce. We've seen price over the past couple of years bouncing at this particular level. So if we are to see any further negativity playing out, we would need to see a close lower at the end of this month. In fact, for the start of February, below the 38.2 level. If we don't, then we could see further consolidation with price consolidating with an attempt back up towards a 50% weekly fib level over here, which represents just below the 94.85, before we see price reattempting the monthly fib level here at the 23.6, which has clearly been a resistance level over the past number of years for this particular pair. US dollar Japanese yen, the monthly, a lot of positiveness for the US dollar against a very weak yen, has seen price rallying very, very aggressively through 2012. In fact, we saw a major pause through 2013. However, towards the end of 2013, we saw more buying sentiment coming through for the US dollar against a very weak yen, and that's to see in the next session of price action moving higher. In doing so, trading above the major monthly fib level, resistance level here at the 50% level. You can see quite clearly we spent a lot of months trading below that level resistance. Indecision candles there clearly confirm that price was consolidative, non-directional. However, we saw buying sentiment coming through, and subsequently we did get to see that through most of November, and then December we saw further movement to the upside. However, that's now being capped by the 61.8 monthly fib level here, which also marries in quite nicely with our institution moving average on our monthly chart. So if we are to see any further growth for the US market against a very weak yen, we would need to see this month, in fact the January month 2014, closing higher than the 61.8 level. Failure to do so, we could see further consolidation, with price then looking to start looking potentially bearish in its stance for the next couple months. You can see the indicator box over here, primarily positiveness, so we should be looking for buying opportunities. There's one or two areas on our shorter term time frames that don't really marry up. Primarily the RMO and the institution moving average over here aren't clearly working together, which is ideally what you should be looking for. So a lot of indecision creeping in, primarily because we are trading into the 61.8, that monthly resistance level. So if we drop down to our weekly time frame, you can still see I do get a buy signal on my weekly. You can quite clearly see here everything marries up quite nicely. You can see that over the past month or so we've seen price edging higher each week. Not a lot of momentum, primarily as we have been going through the festive season. However, that buying sentiment is still very much in favor for upside. However, you can see over the past 2 weeks, price is now stalled at the 61.8. We do still see a lot of positiveness to this. However, we would need to see this month in particular closing higher to see any further buying opportunities, long opportunities for the US dollar against the weak yen. If we don't see that by the end of close of play this month, then we could see a further pullback or consolidation range occurring, and we could see price testing back towards our monthly fib levels for a good start. So positiveness here, we are seeing consolidation. If that pullback isn't as great, and if you take the current lows on this particular one to the current highs, then on our daily, etc., if we could use a 23.6 as a guideline to say, okay, great, this is the past major support and resistance level consolidation. If long as price can maintain above the 23.6, then we could see a consolidation before we see a reattempt of the current highs we are seeing currently in play. That's it, guys. I'll just give you a brief insight into the long-term sentiment. It's important to see what price has been doing on the long term. You can quite clearly see we have seen some movement through the December period, but we are seeing a lot of consolidation as prices have been testing either major highs or major lows across the four majors. So we are expecting to see some positiveness or negativeness to really see any true sentiment trades for the remainder of this month. However, we are going into the first month of the first week of a new month. In this case, 2014. We have non-farm payroll figures due out this coming Friday. But before we get there, we have also the interest rates announcements and a lot of news that comes out on the Thursday. So a lot of news out this week in particular. Is it going to play or give us an idea of what we can expect for the following months to occur afterwards? That's going to be remain to happen. So we just have to be patient this week, see what clearly the market wants as everybody gets back to business again, and then we can actually start looking to plot our trades for the following months ahead. So that's it, short and sweet. It's good to be back, and if you are trading today, please follow the rules of the template. As I keep mentioning, very, very important. You have to abide by the rules of this particular template, and then you also have to back it up with sound money management. Very, very important. Stick to those two rules. Keep your trading as simple as possible, and you'll be on a winner. I'll leave you with that, and I'll catch you guys first thing tomorrow morning. Until then, you guys trade serenely.